Good afternoon, everyone. So what I thought was going to be a pretty quiet week ended up being, in patches quite volatile. And it all started off with the Fed minutes on Tuesday, which sort of gave out a slightly hawkish tone that they weren't sort of considering any more easing measures, and that led to a big sell-off in the Bund. Luckily, pushed up the spreads a bit as I was long at the time, and just generally sort of sparked the market into life a bit, because it was pretty, it's pretty dire up to that point. And and then after that we had a pretty disappointing Spanish auction yesterday, and that again pushed everything back the other direction. And now the Bunds are actually trading well into the 139s, which is a high. And if we look at the chart right now, looking at this Bund, you can see, you can see this Bund over here, and this is where we were trading before, and then we had this massive sell-off over here, like a 300-400 tick sell-off in the Bunds. And we actually went mid 135s as low as 135.30. And then after that, slowly we've been just clawing that back, slowly but surely, and right now, this was the previous high at 139.04, and we've gone through that, and now we're trading at 139.17 at the moment. And as you can see, it's been a pretty, much more gradual move up in the Bund than it was on the way down, but later, just the last few days has been pretty aggressive, as we've actually sold off quite big in equities. And I think it's just a massive overdue profit taking in the equities. But in terms of the Bund, now they're saying there's another country in trouble, especially the size of Spain, safe haven again. So we're going to probably head close to 140s again, unless anything changes on that aspect. But there was no new measures, no sign of more QE from the ECB mentioned yesterday. And so yeah, in that terms, it looks like we might go test 140s again. And in turn, as you'd expect, the recent move in the Bund has led to the flattening of the yield curve. And this is a chart of the 2s, 10s. And this was the big move up that we had in 2s, 10s, and the big move up in the yield that we had. And then we traded as high as 304.83. And then since then, actually come off 220 odd ticks, which is pretty much like I said before, just an hedged outright on the Bund. And we had a big move up, and now slowly we've been coming back down, and we've actually bust through this sort of support area at 302.81 that we were sort of bouncing off quite handily before today's session. And as we broke 139 and the high from last week, about a few weeks ago, now we're trading at 302.62. So I think obviously it all depends on what the Bund does. If the Bund goes towards 140s, then obviously we're going to keep on coming down right now. But if we sort of get some type of pullback, we'll at least come back, test 81s, maybe a bit more of a move towards 303.50. But other than that, can't see it going much higher as long as these Spanish problems persist. And the real, I've been trading a lot of Euribors like I normally do, and the spreads have been real difficult lately. And this is a chart actually of the set 13, deck 13 spread, and this is where we were trading before 704 to 75 to 85s, before we had the big move up, as we had the 300-400 tick move down in the Bund. And as you can see, we sort of went up 6 fat ticks, which is a huge move in the Euribor. And as you can see, there wasn't really much retrace, and usual strategy. I was short around here, 9.5, shorted more at about 10.5s, and then a bit more at 11.5s. And I just had to hold it out, and then I managed to just job myself in and out, and then managed to scratch it, take a small loss, scratch, so it wasn't that bad at the end compared to what it could have been, looking at what my P&L was. And then we sort of, hovered around there, but at all this time I was shorting it, and then we came back off where you would expect. and then after that we've now sort of consolidated back in this, you know, a bit higher than we were before, but between 9, 10s. But just right now we've sort of broken that 9 level and trading 8.5, 9, as we can see in the spread matrix here. And so it's been a bit tricky in these Euribors, but where it's trading and looking at the past history and stuff like that, you know, my bias would definitely be to the long side. The Bund is only about 50, 60, 70 ticks away from 40s, 140s, so in terms of the lows that I reckon that we can go to on this is pretty much the lows that we were at before we rolled over to the June contract, which is 7.5s, 7 maxes. So, you know, I'll be definitely looking to buy it around this point if it comes there. And if we look at the June 13, Sep 13 spread, you can see it's a similar type of story here. We were trading actually much lower before, 5.5, 6s, and then we had a massive move up, a good 7 ticks, and you know, that was pretty brutal, that one. As you can see, not much retrace, and I think it was a pretty tough one to able to get out of on that one. And yeah, it was not nice. I know a few people that got a bit hurt on that one, but again, you know, when it got down to these levels, I was just thinking to myself, you know, all around these levels, what has really changed? And nothing really changed. So I've just been shorting it all the way down, and then luckily made back what I lost in here and a tiny bit more. So again, now we sort of stabilised between 8s and 7s, and just of yesterday, after that big sell-off in equities, we've now come and we traded as low as 6s, trading 6.5, 6s. So, you know, I was along over here, I was long 6.5s, and I was long a bit of 7s, and managed to average, and then managed to get out of 7s today. So luckily that didn't work out too bad, but you know, again, my bias definitely would be towards the long side. As you can see, this was previous support, so be looking to definitely long it around here, and then short it around 7.5, 8s, because it seems like lately that's been a strong resistance point. And like I said, if these Spanish problems persist, then we're likely to keep on going a bit lower. But you know, I definitely think there'll be a floor around 5, 5.5, especially since the ECB said there ain't going to be much more in terms of easing or anything like that in the near future anyway, unless something significantly changes. So looking at the rest of this week, well, it's a 4-day weekend, and we actually have non-farm payrolls tomorrow, while the markets are pretty much all shut. So Monday we're off as well, so Tuesday, depending on what the number is, and especially if it's a mega out of line number, we could see a really lively open. So looking forward to it, and hopefully there'll be some good opportunities to make a bit of cash. But until next time, have a happy Easter, and do another video after that.